Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, April the 29th, 2013. We'll be looking at a couple of U.S. markets here, making an adjustment to the charts for today's activity right there. What I was looking at this last week, I was talking about this being the first shoulder formation, the head formation here. The second shoulder, we get some sell signs here when we roll over and we start to move lower. That would make sense to me. This move right here, today's activity, is outside of my anticipated strategy there. So it's important that we make the adjustment. What do we see this happening now? The way to view that, the only other way that you can view this, in my opinion, is simply to take this low point here all the way up to this middle measured move right here. So that's the middle point. So you measure this distance out, add that, and then that tells you how high you can expect the price to go before you peak again. So what you'd have here within at that point just be this rising wedge formation. We'll talk about that later. Broadening top, if you will. Keep an eye on that, looking for a new entry opportunity there. If you've not been stopped out, because the stop is right here, you will likely be stopped in the next day or two, so keep an eye on this. Continue to move higher, but again, I want to look for a short opportunity in this. I do not want to be a buyer here. There's many reasons for that. The main one from technical perspective, high point here, lower high, lower high, lower high. Even now we're seeing lower highs on the ultimate oscillator comparative to the price activity that we saw this high point here. So we're still doing a very small bearish divergence formation there. That means overall you're seeing momentum to the upside is decreasing, moving to the downside, while price activity just continues to go higher. That's a bearish divergence. It's not to be trusted. It's going to fall apart. Again, think about sell and may go away. That starts on what, Wednesday of this week. You'll start to May 1st. So again, there's nothing here that I want to go out there and go buy these markets for any particular reason at all. I do want to be looking for my short entry opportunity though. Quick little glance here at the NASDAQ. This one we were stopped out of today. Then it stops out our short position, but we have the same basic overall story still forming. We have this low point here, lower low here, lower low here, so tracking down. At the same time period, you get a high point here, higher high here, and now you're going to be making a higher high here. Still broadening top forming here. Look for a little bit of move further up to the upside here, and then again on the short side, we're looking for this to continue to move again to the downside. And the main thing to take away from this broadening top pattern is that volatility is increasing. Each move gets bigger than the one before it. So you can come up here, hit this line. What you're going to do, you come back down here and take out this null here. So again, this is just a topping pattern, something I want to be looking for a sell opportunity into, not looking for something to buy. The Russell 2000 small cap index seems a little bit different to me. I mean, still a broadening top formation, but it's kind of auto rolled over. So you've got this high point here, high here, high here, and high here, and you simply draw your top off of that, and you can see that you don't have much further to go. This one here as well. Much further to go to the upside before you hit that sell point again, and that's about in line with what you've seen here before. Anyway, so I keep on this one again, keep my stop off this high point way up here on the Russell. Continue to let it move to the upside, bounce off of that, and head lower. Just looking like we're testing these points. I should draw it like that, and be looking for the test of the slowdown here. Okay. Looking now at the SPX, the S&P 500 large cap index, the same basic overall story, high point, higher high, higher high, probably going to be a higher high here. You could draw it that way, you could draw it this way. It's not really sure how to do it just yet. I'll keep an eye on it. And then this point here and this point here, I should be drawn down like this. Keep an eye on this broadening top here. This one's a little bit, a couple details here that I'm not a big fan of. If this is right here, then in order for that to be true, then you have to duplicate this out of the top here. So you have to have this distance added to this point here, and that would put you about in line there. So it'd still be a pretty big size move here in the SPX. And I don't think you've got that much of a move in the S&P, but you might have. So that's why I've drawn. It's possible to be drawn that way, and the way to be drawn a little more like this, but that would put a top already in place. And this is just extra fluff here, like a little thing you saw over here. It's possible as well. And there's a couple reasons to anticipate that may be the case. First, of course, being the bearish divergence formation that you've had going on this chart for a while, going back from the high point here, lower, lower, lower. We're just showing momentum to the upside is decreasing, and that means momentum to the downside is increasing. At the same time here, you can see price activity, the high close here, it just continues to go higher. That's not sustainable. We're going to actually take out the lows. We already pointed out this low point here on momentum, telling us that we should be going lower. When the price does that, that's being confirmed by the ultimate oscillator. When you're making higher highs, you're not being confirmed, and that's the BS part of it. Another thing to show you here, we'll be looking at the VIX, which runs the inverse of the S&P, and that shows a completely different story than today. It shows today's activity is 100% fake. So let's look at it real quick. Okay, we just saw the SPX is showing a little nice size move to the upside in the SPX, and so with the VIX running the inverse or the opposite of the S&P, you would expect to see a confirmation with a down day in the VIX. You should see a nice, good, strong move to the downside, right? Just reflecting the opposite of the S&P moving to the upside. However, you're not seeing that. In fact, you're seeing it. We're just finding support right here, and a higher low than we had seen previous when we started signaling you should be a buyer here. All these things we talked about before when we started to develop this uptrend formation here. Told you that the uptrend here is going to be reflective in a downtrend in the S&P. However, the S&P is still making an uptrend. We told you way back during this time period here that this was actually not going to be one of these two charts was lying to you. Either the S&P was lying to you or the VIX, and we believed that the S&P was lying, and then the VIX continued to make its move and start to fill this gap up here. Now we pull back down here. Still, when you're in an uptrend in the VIX, you expect to find support at the 50-period moving average, that red line right there. That would make perfect sense. What are you finding? You're finding hammer candlestick formations at the 50-period moving average. That's perfectly in line. Everything makes sense. Now, what are you really reading whenever you look at the VIX? You're looking at professional money managers and whether or not they're confident in a move in the markets and the S&P or not. If they're confident, they will relax and not purchase any options to protect themselves, and you'll see the price actually sell off substantially on the VIX, while the S&P will continue to rally much, much higher. When they're not that confident, you'll start to see an uptrend in the VIX because they're buying options to protect themselves. Remember, they're thinking about selling may go away. They're thinking about the economic GDP data we had last week that tells us that we're seeing our economy getting even weaker. There's just so many bad pieces of news out there right now. I just can't even begin to spit them out for you. But the main thing here is to show that they're obviously picking up some concern signals and they're adding to their options. They're buying options, which is of course protecting themselves from a market crash. So the higher this thing goes, the more they're anticipating that. Now again, this is showing that they're not anticipating a rally in the SPX, or the S&P 500. So it's important that you look at that and say, well, yeah, I see the S&P rally today, but just because the market goes up doesn't mean I buy. In fact, what we're seeing here on this chart is telling us that they don't believe that's a true move to the upside. So again, I would say be very bearish this market. Looking now at the EMW, the Wilshire 4500, we can see again with the broadening top formation here, and we're looking for another one here. Again, not much room to move to the upside before we hit that, so I'm looking to sell off of that point here. Again, that would be also in line with what we talked about last Friday. We said the only thing missing here is there's no sell signal. If we see one develop right here off this top, we've seen over here, that would make a lot more sense. We'd expect to come down here and hit off this line here. It's a bigger move to the downside. Again, with the broadening top, you want to anticipate bigger moves every single time it happens. So this is very important. But also, I want to point out that you can see using the broadening top forming, when you go across all the U.S. major markets, you're getting confirmation on almost all of them. So again, I look at that and say, well, that's more likely the case scenario that you have a broadening top because all the market charts are confirming the same pattern. That's one of the things you want to always do is compare your certain charts that are in the same either industries or in the same global segment of the trading environment and figure out whether or not they're all telling you to buy or they're all telling you to sell. And in this case, they're all telling you to sell. Okay. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Also, if you're looking for my personal charts, my short-term or long-term, you can go right here into the market charts section, and you will see my annotated charts, and they're updated every single night with my stop loss limits and so forth and so on. Okay. God bless. Take care. Enjoy the day, and I'll see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.